Hi, everybody. Bob Icino, Chief Market Strategist from Path Trading Partners, as well as co-portfolio manager of the Stock Think Tank. Here with another trade example. This time I'm going to do two examples for you. One is going to be in micro Bitcoin and the other is going to be in micro gold. I'm going to show you a couple of trade example setups that I might use depending on how the market plays out. What I have up right now is a micro Bitcoin chart, and I want to get started with this. Micro Bitcoin is one of my favorite fairly new products from the CME Group to both hedge the exposure that I have in Bitcoin personally, as well as take a shot at some speculative trades that are planned out and that are risk controlled with our same processes in place. So let's take a look at the chart. Here I have a micro Bitcoin chart up, and we're in the midst of a pretty significant sell-off from the highs that you saw here on about November 10th of last year, high being about 69,360, all the way down to looks like about 35,000 or so that we're at currently as I speak to you. So what I have on this chart is the 200-day moving average, and then I've got our classic rotation zone, which is a mix of a couple of exponential moving averages. Now, what you can see here that has already happened, we had a cross of the rotation zone here on about November 19th. We don't trade moving average crosses. But then we had the market go up into this rotation zone and fail. That's when we enter trades, is when we get a move up into the aptly named rotation zone and then a move back down, as you see happen here in the beginning of December last year. Then we had a second one here as well, a move up in the rotation zone and a failure. Now we've gotten a break of the 200-day moving average, and we've pulled away from the rotation zone. What this does is this actually tends to strengthen the rotation zone because the moving averages start to widen out and steepen even further. So what I would expect to happen, doesn't mean it's going to, but what I would expect to happen is for the market to now make a move up into this area. Now I'm not going to buy. I'm not going to catch this falling knife. What I'm going to look for is a move up into the rotation zone that also potentially tests this 200-day moving average. And then I'm going to look to enter a high probability short trade here. So in order to illustrate this, I'm going to go ahead and make a little fake candle right there. Let's do it right here. Okay. And then I'm going to drag this over to what I think might happen. So somewhere in here, you might see a move. It's a really big candle. You might see a move that looks something like this. And I could also potentially clone this and make it 2 or 3 candles that are going up into this area instead of just the one. Let me grab this here and move it over a little bit. So what I would expect to see is a couple of candles, whether it takes 1 day, 3 days, 5 days, whatever, doesn't really matter, to move back up and test this area that I've drawn with this horizontal line right here. If and when that happens, I'm going to draw a trend line right around here, pointing up in this direction. Now again, this is very loosely drawn. It's a very rough trend line. It doesn't have to be perfect. And if this were to happen and the market were to then, let's make another one of these and let's take that one and make it red. Let's just use the example of this one. So I would then look for a candle to break down and take a short position here. Now, if that were to happen, okay, if it were to play out like that, here's how I would set up that particular short trade. Remember, these 3 candles are fictional. I've made them right now. Then I would come over here and I would grab this trend-based fib extension, and I would go ahead and draw the move from here to here and then up again to here. And these would then become my targets for the short trade. Now, I'm going to go ahead and say that the 112.5 extension would be my target. So I'm going to go ahead and draw another horizontal line there, right around that 3250 level, which would become my target. Obviously, it's near that round number, so that could work out pretty well. And I'm going to get rid of this now because I just want to find a responsible or a respectable stop area. And I think the responsible, respectable stop for a trade that was entered right around here, let's put a line right around where we would enter the trade as well, because it would be on the close, right about there. So we'll say that that is right at 35,435. That'd be our entry. So now we have to have a reasonable stop level. Now I would say my stop level would need to be somewhere above this rotation here. Now I can already visually see that this particular move, the amount of risk versus the amount of potential reward on this trade, is not going to work for me. So I would either need a higher rotation from this particular move up and then a bigger breakdown so that my measurement would be different and extend my target, or I would have to pass on this trade. Now, if I were just going to figure out size, let's say that the stop were here and I could see visually that it works out for me. So let's say that my entry is where I said it was going to be, which is this line here, 35,435, and my stop was going to be around 38,805. I, as always, want to check my amount risk on this. So I'm going to pull up my position size calculator. Again, this is available on our website. And I'm going to go down the list and I'm going to choose micro Bitcoin here, right there. And I said my entry, which you enter into this box here, is 35,435. And my stop, let me go back and remember what my stop was going to be. My stop level was going to be 38,805. So in the stop area, I'll add 38,805 to that. And 2% risk of 2,000 allows me to do how many contracts? 0. My risk per trade is $40, and the risk per contract in this one is $337 with the micro Bitcoin. So there is no opportunity for me to take this trade unless it tightened up or unless my risk per trade increased to, say, 20%, in which case then my risk is 400 and I can do one contract. Now, I wouldn't advise ever changing this to make a trade work. The fact that this was at 2% is what saves you, because now we're at 0 on the position size, and it tells you that this is too much risk for your particular risk profile. That's the actual value of using a sheet like this. So let's go to micro gold now. So here we have a micro gold daily chart. Now this is a little better situation for me. What I have here is I have, again, my moving averages that make up our rotation zone widening out and angling up. I've already had one move down in here where you can see if I would have drawn my trend line and entered, you would have gotten long way up here, which is far too outside of what we're trying to do from a risk perspective. But I have another rotation that pulled back toward the rotation zone here. Now this is called pushing the price. The rotation zone is actually pushing the price higher. So I can go ahead and draw my trend line right here, and I can see, and again, remember, this is a very rough trend line, that it's already basically going to close through my trend line. So I can take a long position here. So let's go ahead and put a horizontal line approximately where that long position would be. I need it to close through there. Okay, remember that. And as of the time I'm making this video, we have not closed yet. But so that's going to be somewhere around 1840.10. Target on this one, I'm going to take that same tool. It's going to be the trend-based fib extension. And I'm going to go from this low to this high to this low. And I'm going to mark off this 112.50 level with a horizontal line again. So it's right about here. Now I'll delete this so it's out of our way. And this is all approximate. You would do it much more exact if you were doing the actual trade. I'm just showing you a trade example. Now in terms of the stop level, I have built-in support here around this set of candles here, around this set of candles here, as well as having the rotation zone and this low all in that same area. So I'm going to draw a horizontal line right around here and know that I can put my stop below this, and it's going to be a decent stop level for this particular trade. Now you can just visually see that from my entry to my target, there's a bigger area here. So I already know I'm better than 1-to-1 on this particular trade. My next question then needs to be position size. So here's my futures position size calculator again. In this particular example, I'm now working with a different account. Imagine this was a $5,000 account with 5% risk per trade, which means that my risk per trade is about $250. That's my tolerable level. So I'm going to go in here and I'm going to look for the micro gold contract. And again, this is proper risk management. I have my entry level. I have my stop level. The entry level we said was going to be somewhere around 1840.40, and the stop was going to be below 1827 and change. So let's just, for the sake of conversation, put it at 1827. The ticks at risk are 134 ticks. The trade risk per contract is $134. My maximum risk per trade is $250. The sheet calculates that I'm allowed to do one contract here. Now, you might think with this, you've got some risk that you're not using, and that's true, you do. So what do you do here? Do you up it to 2? No, you don't up it to 2 contracts, because if it's 2 contracts, it's going to be $268 risk, which is more than your risk per trade of $250. You don't ever want to go over what you decided your risk per trade should be. One of the things you can do is you can give your trade a little bit more room. You could maybe put this down at 1822 instead of 1827. Now you'll have $184 at risk, still one contract. You could possibly put it even lower than that. Let's say 18. Now you're at 224. What does that do? Well, that gives your trade a little bit more room to run in the case of a sell-off in gold, but also still keeps you within your risk. Now, I would rather have a lower potential loss. I know that my risk reward is greater than 1-to-1, so I know that I'm going to make more than the amount I'm taking risk, or the amount I'm putting at risk, if my trade actually works out. Or you can give it a little bit more room to run, make some sort of allowances for higher volatility. That's another way you can handle it. But otherwise, there's your trade example set up in the gold. Looks like I'm going to be getting in this trade a little bit later. We'll see where it turns out or where it closes. And there you have micro Bitcoin and micro gold. Hope you enjoyed this, and I will talk to you guys very soon.